What's going on, guys? I want to recap a little bit of Friday's price action because I feel that the opening drive, right? The opening, let's call it 20 to 30 minutes, a lot of traders got trapped, right? For what seemingly was a overall trending day to the upside. Now we had a very, very big move coming around 30 minutes off the open, and we had a few hours of consolidation period, but a lot of money and winning trades should have been made during this point in time. And I want to kind of show you guys how you can avoid getting trapped off the open. So myself, I was playing a few evaluation accounts along with one of my funded accounts on Friday, and I was really focusing on the long. Okay. So my bias was leaning a little bit more towards the long side, just due to the fact that the overall daily chart is still in bullish context. Okay. So we're still trading over that 50-day moving average, over that daily 20-day moving average. A lot of the pullbacks and a lot of the volatility needs to kind of get shaken off. Now, again, I'm not opposed to going short if the opportunity presents itself, but in those particular situations, I do want to go very small size. And if I do take a little bit bigger size on a move that I personally, again, because trading is very dynamic, a lot of it is reading price action candlesticks and kind of sticking to your strategy, but you do have to have an overall feel of the market. I will kind of cut that price target in half and just look for, maybe 5 points. 5 points is not a lot when it comes to trading the NASDAQ, but as of late, some of these pullbacks, they're not really permitting very, very big opportunities. So I'd rather take the higher win rate than try to become a hero and catch, the top, right? Again, you're never going to call the top. You're never going to call the bottom. You want to honestly stick with the trend. Now, if we kind of look at the first opening candle here, we put in this very aggressive bullish hammer candle, kind of came up to this most recent swing high, got rejected. Now, here's where traders could have, gotten a little trapped up. We came down and closed below this 20 SMA, and it confirmed and it immediately snapped back up. I can see a trader getting caught in this move. I can see a trader also getting caught in this long. You think that the breakout is happening and then it pulls back. There's only one of two things that you could have done. Played a very small size to where you're going to give up around 35 points on this potential move, or closer to 45 points if we break this 200 period moving average. Or the only other thing that you could have done was not take the trade, right? Now, the reason why you would have not taken this trade is because you're going to want to see these two prior little swing highs get broken and then confirmed. So the true entry would have come here, okay? It would have come here 30 minutes off the open. Now, I could also see how a trader, as soon as this fails, they then get back into the short position only to be bounced out again. So Friday's open, the first 30 minutes, extremely volatile. And I was even trying to tell a lot of the traders in my room, guys, I don't personally like the price action. And to be honest, on one of my evaluation accounts, I took the long here, okay? I'm human, just like everyone else. I took this long here, ended up getting blown up, right? Hit my daily max loss on that one particular evaluation account. Luckily, I have multiple accounts. Again, each trade, we have to take it with a grain of salt. There's always another one around the corner. I ended up passing a $250,000 evaluation with Apex. I also passed another Top Step account, bringing my total express funded accounts up to 3. So now I'm maxed out on those. So all in all, yeah, you kind of have to take the good with the bad with the good. So in this particular situation, you need to start identifying very, very quickly that the price action is choppy. Okay, so when you start identifying that this price action is choppy, you need to start looking for bigger levels. And those bigger levels is going to be here, this 200-day moving average. So notice how each of these pullbacks fall shy of breaking below the 200-day moving average. Now, if we're in overall bullish context, meaning the market is pushing higher and the market is holding strong daily levels, the one thing you don't want to do is start looking to jump those short positions, thinking we're going to break down without breaking the short-term intraday 5-minute 200-day moving average. Now, if we would have broken and closed below the 200-day moving average, I'd be very, very interested in taking that short position. And if you kind of notice, the next time we take out these prior swing highs and that new high we put up, that was a run up here. So again, it also set up an active 20 SMA play. I know a lot of the people in Evolution Traders ended up taking this trade. They made some very, very good money. So notice this candle is almost 50 points. So just, you have to do math very quickly in your head. When this candle closes, you've got to at least give it a 1 bar. Right? Or a close below the 20 SMA as your stop, or the 200. Now, for every 1 micro contract that you're going to trade, you're going to lose a total of $100. So just keep that in mind as well. If you're trading 3 contracts, you're losing 300. If you're trading 4, you're losing 400. So again, how much do you want to risk? is the potential on how much you could potentially make. Now, again, a lot of us don't sit here for the whole 40 points, whole 50 points. I know I don't. I'm kind of just looking for that 10, 15, 20 points kind of getting in and getting out. Once this does confirm this active 20 play, it does run into the next area of supply. If anything, we should have been all out of that position, or at least maximum, majority of your size, around 18,005. What is this? 18,846. So we should have been out here. And then if you want to hold a runner to see if we break and continue, then you can go ahead and do that. This was also the next kind of trade setup here. Now, you guys always know that I'm preaching, look, wait for the first hour candle to close. If you have trouble trading off the open, the biggest advice that I can give you is to wait 30 minutes. Okay. Yes, there's going to be some days where you do miss a trade here and there, but overall, the market can't go higher for that day until you take out the first hour high, or it can't go lower until you take out the first hour low. So ultimately, what you can avoid by sitting out the first 30 minutes is all of this up and back down price action, this up and back down price action that faked a lot of people out. To be honest, I was almost, highly considering calling it a day altogether when I started, sitting through this price action in the morning. Luckily, once I caught this trade, it kind of gave me a little bit more skin in the game to kind of continue and see what else I can potentially do. But if you were a trader that maybe has it in your playbook, has it in your rules, that you're not going to take a trade for the first 30 minutes and you're only going to look for setups of the first hour high and low break for that continuation confirmation, or you're only looking for active 20 SMA plays into supply or into demand after the first 30 minutes, then you would have completely avoided these two, potentially three trades that did not work out in this first 30 minutes. And you would have caught just a huge winner as your first trade, enough to kind of call it a day on a Friday. Remember, a little bit slower after lunch, going into lunch. It was Friday. It's a long holiday weekend. By the way, hope you guys are all enjoying your weekend here. We're doing some chart work here, kind of getting you guys ready for Monday. But again, once you have these big long 3-day weekends, these holiday weekends, a lot of the players kind of step out, right? A lot of the players tend to, push up an opening move and then kind of reverse it and then go the other way. It's just the nature of the beast. It's like that for 4th of July weekend. It's like that for Black Friday. It's like that for Christmas. It's especially like that for Thanksgiving. So again, you have to understand that these holidays do play a factor. I understand that we're very excited and eager to want to trade and make money and pass evaluation accounts and get funded and do all this other stuff. But ultimately, you have to do what's best for you. And if you are looking at yourself losing trades in the first 30 minutes more so than you're winning trades, then maybe it's probably the smart idea to kind of eliminate yourself from that situation and only look for trades after the opening range hour candle closes. It used to help me a lot in certain market conditions when I was trading on the option side of things. As of late, it's kind of helped me, if I don't catch that initial winner in the first 30 minutes, to kind of then sit back and wait for that opening hour candle to close. Now, for me, I'm located here in California, so the market's going to open at 6:30. I'm mainly looking between that 6 a.m. hour and that 7 a.m. hour. I'm looking for the majority of my trades between 7 and 8, and then between 8 and 8:30, and then around 10:30. Okay, so there's a good chunk in the middle where I'm not really looking for trades, and there's a good portion of time off the open where I'm not really looking for trades. It's very rare that I get a setup right off the open, and generally speaking, let's say that setup pushes long off the open, generally it tends to retrace and come back down before that hour candle closes, and vice versa. If we get a washout, it tends to get trapped and then tends to bounce. So normally if we sink, I'm looking for the trap and then going long on the bounce. If we shoot up off the open, I'm looking for the trap and then I'm looking for the reversal. However, in this particular case, we kind of tried to trap to the long side and then immediately sank. And then the bull stepped in and trapped, and then that's when we got this big explosion move. However, I could see how, and including myself, I took a pretty big hefty loss on one of my accounts during this particular time when I thought we were going to break out, because if you notice this candle, it was an active 20 play, confirmed, broke out, and then immediately shot back down. So again, that's just the nature of the beast. There's nothing to really, nothing to really do in that situation. The only thing you can do is continue to throw the darts at legitimate setups. My next legitimate setup was here at the top of the hour through first hour highs as well as this 20 SMA. That's the thing, guys. Trading is a game of probabilities. You're going to win some trades, you're going to lose some trades. You want to make sure that you're sizing yourself accordingly, so that even if you do take a daily max loss, you're not going to lose your account. You're still going to be in business for tomorrow. That's all we're really looking for as traders, is just to be in business for tomorrow. Hope you guys enjoy the rest of your weekend. I'll see all of you guys on Tuesday probably. I'm going to be, kind of watching price and kind of going over some things with traders and evolution traders on Monday, but it's not going to really be an active trading day for me. I might not even take a trade tomorrow. It's only a half day. I just don't see the real need, and there's not a whole lot of emphasis or stress for me to kind of, put myself through that slower price action. I have a feeling we're going to get a move, but it's probably not going to be a move that's going to be that exciting. But again, don't feel FOMO. Tuesday's just around the corner. We're all going to be here to trade another day.